we had a potential client we were working with, and they wanted to retire. Husband and wife are not of the same age. There's like a 3-year gap there. And so he is 65. He's wanting to retire. She's 62. She isn't working. She's on his health insurance. So him retiring, when they had calculated their need for finances and everything, they were completely good. What they forgot to include in there was the fact that he's eligible for Medicare. She's not. She still has 3 years. For her to get the same quality health insurance that she was getting through his employer, she was going to have to spend like almost 20 grand a year on health insurance. So it was like $1,800 a month. The extra $1,800 a month was not accounted for. And this made their probability of being able to live off that money and be all good go from 99% all the way to 40. I mean, it drastically changed the whole thing because they had just enough to take money before she was eligible for Social Security without incurring any penalties and that kind of thing, and get them by and make them through. So like their probability was just right. The 20 grand they'd have to spend was the tipping point. And really when we ran all the numbers, even if they spent 12 grand, it still was a tipping point that put them in a position where if they had any losses in the early years of retirement, meaning a 2008 or a 2020 or a 2001, name these periods where there was just massive bear market. If it just so happened that one of those bad downfalls in the market and the economy happened simultaneously with the first couple of years of retirement, when you paired that with the fact that they're spending an extra $1,000 to $2,000 a month on health insurance, it couldn't support it. All the models show that it's just too high of a likelihood. So anyway, I ended up training on that on Monday and talking to the team about how to identify that when you see a person where there's one of the two spouses not eligible for Medicare and they're wanting to retire and they're going to lose employer coverage. We got to go in and we got to run some stress tests on their money because they've got to have a significant amount of money above and beyond the need to be able to support an extra 12, 15, 20 grand for the first few years. It was just, that was the tipping point. And it proved the point that it's not always this extra cost that you go in intending on spending, like health insurance. The same thing happens if you just so happen to take massive losses in your investment in those first couple of years because you're drawing against it and there's this unplanned for, unexpected, extra kind of depletion. So anyway, it sent my training off on a little bit of a tangent and an unexpected like pivot, but I was like, man, we just ran into it in real life. And we run into a lot of people where they're out of gas. They don't want to work anymore and they want to retire and their spouse is younger and they just don't plan for the fact that health insurance is 5 times more expensive on the street than what they get it through their employer because big corporations are at a benefit war. They don't all want to pay more money to you, so they will provide more benefits on the back end. So you may not realize how much like hidden paycheck you have with how much money they're spending on you for healthcare. But I guess my message here is if you're nearing retirement and you and your spouse are not both eligible to go onto Medicare and one of you is going to have to pay for health insurance out of pocket, you need to run a stress test. You have to have a clear understanding how much will those expenses impact you. Don't go into it just assuming, it's no big deal. It's just a couple of years. Those couple years could be the massive iceberg hidden under the water that you don't see, that you don't hit until you're in your late 70s. And now it deteriorated at the beginning so much, put so much stress on it that there's no turning back, right? Titanic hits it, it sinks, you're out of money or you're running out of money and you have to radically change your lifestyle and you're 15 years into retirement. It's the last thing anybody really wants.